Make sure it is in fact streaming, which I think we are. I think we're good to go. So, boom, we're live. It's Chris Igoe, Simply Home, South Florida, and we are doing big things. We are getting stuff done. Last night, I shared a lot of content about things that can be done to get your buyer a competitive advantage in this market. Today, I want to go even deeper on that, and I've invited my friend Ryan Brandenburger, who is a all-star in this industry. I mean, he has saved our buyers numerous times, and I'll go into that in a minute. Before I do, let me welcome Ryan and let him introduce himself.
Hi, everyone. Thank you for having me, Chris. This is I love watching your program, watching your shows, man. It's so informative. So I really appreciate you giving me an opportunity to come out here and say hello to your audience. My understanding, we're talking to realtors today, right?
Yeah. So last night I did a little bit of a training on what could be done to give their buyers a competitive advantage in this market. I mean, as you know, the real estate market really everywhere in the country, but specifically in South Florida, is insanely competitive. So every time that we're representing a buyer, we're always going into a multiple offer situation. There's, if we have a buyer who's looking at a property, then there's inevitably at least 10, 15, 20, 30 other people that are looking at it too. And they all have, you got cash buyers out there. You've got people who have great terms out there. And it all starts from our perspective with the buyer getting to, first of all, know what their financial picture looks like, and then creating the most competitive contract that we can. It all starts, though, especially unless it's a cash buyer, in which case, there's no real issues here. But most of our buyers are going to need financing, and it starts right out of the gate on our end with qualifying them, right?
Sure.
So what I'd like for you to do, and maybe we can kind of, as we talk, kind of role play different scenarios, but what does that look like on the lending side? So, for example, I got a YouTube lead. Somebody finds me on YouTube. Right? Sorry, they find me on YouTube. They've got it in their head. They want out of wherever they're at. They want to buy a $800,000 home in the Canyons, for example. I then say, great. I take them through my buyer brokerage presentation, which if you guys watch the channel at all, you've seen that before. But the first thing that I do is talk about you must get pre-approved. If they're working with another lender, I always tell them that it would behoove them to have a conversation with you so they can just get more information and see if they really do have the most competitive advantages that exist. So why don't you talk about what that looks like?
Okay, so it's a I do the same mortgage as every other mortgage company, right? I always like to make that clear to the customer, the buyer specifically. That you're not using me because I have some special mortgage product. I'm a commodity. Mortgages are like bananas. There's really no difference from the banana at Publix and there is at Winn-Dixie, right? And that's really when it comes to the product side of things. That's what we are. It's FHA, it's conventional, it's VA 90% of the time. There's other programs, yes, bank statements, there's foreign national programs, there's asset depletion loans, there's all these other loans. But the reality of the market right now, for the most part, are conventional FHA and VA. So a lot of times when a customer is choosing a mortgage company, they get so wrapped up into thinking, well, let me check this mortgage company's products, or let me see what this company has from an interest rate. And, you check one mortgage company on a Monday and they have a 3%, and then you check another one on a Thursday and it's 3 1/8, and you're going, oh man, that other company was cheaper. When little do they know the market's moving like this, like gas prices throughout the week. So, it's not the products, it's not the interest rates. That's not our value proposition in the market. The value proposition is our approach to this process. And what we're trying to get to do is we're trying to be the best choice for a buyer, but most importantly, the best choice for the seller. Because without the seller's acceptance of a buyer's offer, we don't have a deal, right? So, you could have the mortgage approval from from a big, large bank, and it can have a low interest rate, but without having the seller accepting it, it's like it gets you nowhere. So my job, one of my primary functions in this equation, right? This real estate equation. I don't want to say it's providing a mortgage. That's just generic. It's providing a superior process for my customers to put their loan in, and that's what I can control, right? I can't control FHA's 3.5% down rule and fix, so I got to focus on what I can control. And Chris, that's why I'm going to touch on some of those things. What is it that I can do today to not just make the buyer more attractive, but make me more attractive to the agents in the world out there, which is, it's a big component of attracting business, and it's shortening the road. So in a multiple offer situation, which you said almost every home is going to be in that exact situation. There's going to be, if there's not multiple offers on the house, I'd probably run away from their house. There's something wrong with it.
There's something wrong for sure.
There's something wrong, right? So how do we stand out? There's the, how do I become the purple elephant? The purple cow. That's the book. The purple cow, right? In a field of brown and white cows, the purple cow. And you got to stand out. So what I'm able to do is shorten the processes that typically they'd say, well, it takes 30 days to close a loan, right? If you ask a room full of realtors, you say, hey, what's the average time to close a loan? 30 days. Somebody will say 21 days. Somebody will say, well, I got a guy who one time did it in 15 days. And I got to look at the room. I can close a loan in 7 calendar days. And Chris, do you know the only reason why I can't do it in 5?
What's that?
The law. The law says I have to have 7 days for you to look at your disclosures.
Actually, if I remember correctly, so when one of the you saved me and my buyer. We were representing a seller out in Coral Springs, if you remember this, Rachel.
I do remember.
And we were, I think, 5 days from closing, or maybe even less. And it turns out that so we represented the seller. The buyer's agent, I don't know what they did, but the lender just completely dropped the ball. So there was no funding. I pivoted them to you, and then we were able to actually get that deal closed. I thought it was 5 days, but if you're telling me it's
Chris, I do remember it because I remember taking the highlight of the milestone movements and how quick it went. And I think I posted something on Facebook and shared it with you. We had the clear to close in 5 days, but we couldn't get pen to paper for 7 until the 7th day. But where I'm going, oh yeah, you better believe. Well, I'm not going to take it. If I say it's going to go, it's going. It's going to happen. But I wasn't going to let you down on that one. And I think it was a huge catalyst into where we are today in a business relationship. As friendship aside, we've really, that's where it started. You're like, holy shit, well, if he could do that in 5 or 7 days, imagine what he can do in a traditional 30-day contract world, which I don't even think we're in anymore. I think 30 days is pushing it with a lot of these offers.
Well, so to be clear, the standard FAR contract defaults to a 30-day loan approval. And
correct.
What I've shared with everyone is if you're going in with a 30-day loan approval, you got zero shot in hell of actually getting that contract accepted, because it doesn't take 30 days to close a loan.
No, well, so let's look at what is best practice today. Let's say you bring a buyer to me and you're going, Ryan, this guy keeps losing out on these offers. He's got this loan approval from an internet mortgage company or out-of-state bank. What can we do? So what am I going to, first of all, I'm going to obviously have a nice, good consultation with him and get to understand what his goals are. We're going to talk about qualifying for those goals. And then most importantly, what's my why? I always got to have this conversation with the customer. I'm like, why me? Why? Chris has got 100 loan officers knocking on his door every week. Why me? And that's where I have to tell him that I'm the greatest loan officer to ever walk the planet. No, I'm kidding. But that's not, but I can laugh about that because it's so not true. It's impossible to be that. But what is possible is I can shorten the rope on all these processes. So let's talk about the first thing. Customer, the first step to getting a home loan is you have to do a loan application, right? They do that online application. I'm on it immediately, right? I have my Michael Telesco, my team, and boom, we're pulling credit. We're running desktop underwriter. Now, in a traditional world, that would be enough to issue a pre-qualification letter. Here, thank you for doing your online application and letting me pull your credit and sending me over a pay stub. And you can get away with that in a soft market. But in this market, we go the distance on the customer's application right away. So what I can do, and I do this for my customers, is I underwrite the customer up front before they go under contract. And they get a little annoyed sometimes. They'll say, why do you need so much, but this other company only needed this? I said, because the other company is going to scratch the surface of your pre-qualification, then take the next 30 to 45 days to close. I'm going to get everything done now so you can go put an offer in with this. Instead of doing a 30-day loan approval or a 7-day loan approval or a 15-day loan approval, give them the underwritten loan approval at the time of offer. That shows that you have not just gone through the application process, but it's actually been signed off on by an underwriter. Now, there's only a few companies that do this, that will underwrite a customer up front. The reason why is that it's expensive to underwrite every customer prior to contract because you don't know if you got a deal. Luckily, I have a super high retention rate, so I don't worry about that. So we underwrite the customer up front. So Chris, you can now take that underwritten loan approval and submit it at the time of offer. But there's more to it. Well, now we have an appraisal process we got to go through, right? So we've overcome the loan approval by giving it the underwritten loan approval at the time of offer. Now, what's the next hurdle? We got to get an appraisal done. So with an appraisal,
let me jump in for 1 second here. So
sure.
One of the longest issue, or one of the things that takes the most time in my experience with working with other lenders, and I've worked with a lot, is exactly what you're about to talk about right now. So you can't have a 15-day loan approval. You can't have a 10-day loan approval. You can't have a 7-day loan approval if you don't have an appraisal. So
correct.
Ensuring that you're working with a lender that's able to actually execute on getting the appraisal in a timely fashion is very, very important. And what buyers don't typically know, and sometimes realtors don't either, is that process takes time. So, and if they're looking at other lenders that are out there on, any of these online services, whatever it is, you're not getting that. It doesn't exist. So that's going to be a big. Yeah.
You know what the trick is, Chris?
What's that?
I'm going to say the trick on that is you got to pay. So you got to look at the appraisers today. We don't hire the appraiser, right? And you know this. We hire the appraisal management company who then has a bunch of appraisers that sign up with them and they take the orders. So I go to the appraisal management company and I bid on an appraisal and say, I'm going to pay $500 for an appraisal. And all these appraisers are underneath pulling those orders down going, I'll take that one. Oh, that one in Coral Springs. I got to do another one in Coconut Creek that day. I'll take that one. And they're pulling these orders down. What order of operation are they pulling them down in? Proximity to the last deal. So you start noticing like areas that are a little bit more rural are taking longer to get appraisals back. There's not enough appraisers and people don't want to go that far. Why drive across the city or town when you can go across the street and do an appraisal? So we're seeing this massive shortage. We don't have enough appraisers to handle the massive influx of buyers. But guess what? They like money just like everybody else. So instead of offering them $500 to do an appraisal, imagine this scenario. You call me, you go, I got this buyer. They want this house, but they got to beat out this other offer, and they don't want to do an appraisal contingency. The seller wants no appraisal contingency. I say, great, Chris, get us a 10-day inspection period. Get us a 7-day inspection period, and I'll get that appraisal back in 7 days. But wait, there's not enough appraisers. What are we going to do? I call my appraisal management company, and I cut the check. I'm in the mortgage business. You're in real estate. We know what our commissions are, right? Guys can do a $500,000 transaction. You're telling me if I give a $350 rush fee to an appraiser, I'll get the results that I'm looking for? I'm not jumping over dollars to pick up pennies here. Cut the check. Next thing you know, I got the appraisal back in 48 hours. So there's ways to overcome that, but it's usually it's paying people to get the results that you're looking for. But we're not afraid to do that. Fast forward, my close guarantee. I'll put a loan approval at the time of offer, underwritten. I'll do a rush appraisal. Oh, and by the way, I call the listing agent and I'd say to the listing agent, hey, tell the seller that if I don't close on time, I'll give them a $5,000 penalty. And listing agents all the time are going, well, how do you do that? I go, well, look, I mean, the guy's putting down 10% on a $500,000 purchase. That means I got to come up with the other 90%. He's putting money down. Why can't I put money down on it? Why can't I say, hey, if I don't perform, here's 10 grand. You know what the listing agent says? That's how you're going to win the offer with that, because I'm putting my money where my mouth is, and also where the approval letter says. So between the rush appraisal, underwritten loan approval, and the close guarantee, I would like to say I make a difference in the market compared to the 8.5 by 11 loan approval that you got from your local community bank or out-of-state bank.
Right, 100%. And so that's our experience too. And one of the things that I think differentiates you from a lot of the lenders that are out there and some of the ones that we worked with is that you are very proactive and you are quite aggressive in a good way to give us a competitive advantage. So you will make those phone calls. You will always position us to be the expert, be the authority, have the competitive advantage. It's almost, I mean, we are in partnership, right? So you're going to go out there and always advocate for your client, which is us and the buyer. You're always doing that. And so not certainly Zillow or whoever it is, they're not doing those things. So those pre-approvals that you can get online very easily, they don't mean shit. They don't have any real. It's
just to touch on that. I love making that phone call. And I think this is athlete in me, competitive side. Like, I love making that phone call. I love winning, and nothing feels better than when you make the push. I call it the push call, by the way. It's the push call. You submit the offer, I'm pushing it, right? Because they can, how agents are. Agents talk about their offers like they're the best offers, but they want to hear from the lender how really great that customer is. And there is probably nothing more rewarding than having 15 offers on the table. And he's going through all these offers. And my buyer who's expressed they love this home and they're telling me about how they envision their kids in the playground and the schools are perfect. And I'm like, I'm going to get that home for them. And I pick up the phone. I actually kind of makes my skin crawl. I know, but it feels so good when you are able to knock out all 15. It's kind of heartbreaking for the other 15, but you knock out every other offer, right? And they take your buyer's offer because of the extra yard that you go for that person. Now, the customer is ecstatic, right? And in real estate, we're in the business of getting referrals. So when you referred me to this customer and then I made the push call, it's a reflection of you, right? Now, when they're 100%. Talking about, right. And that's what, and now you're like, you're looking good in the equation. I'm looking good. The customer remembers that because they're out there talking, when you do real estate, once you're in the process of buying, you're telling everybody, right? Oh my God. And when you go that extra yard and you get an offer accepted in a multiple offer situation, the customer is more prone to talk about that over and over again. And that's what we're looking for every day in our real estate business is we want people screaming at the top of the mountain about how great we are. And there's nothing great about giving somebody a loan pre-approval with a 30-day close. So it all kind of comes back around. The phone call that I make to the listing agent is part of my job description anyway, because I should be prospecting realtors. And what better way to prospect a realtor by shooting your shot for a buyer? So now the realtor, I tell you that the realtor will say, so wait, you underwrote them up front. You're going to have the appraisal back in 7 days. And you're going to give my seller $5,000 if you don't close on time? Can we have coffee next week? And I go, of course. It's prospecting. So I'm getting the deal accepted. I'm prospecting. And then last but not least, Chris, the third part of it, you're super happy about it, right? So my retention's being done. I'm retaining my original relationship by doing the best job I can for the customer while building future business with that next realtor. That's the name of the game.
100%. Now let me ask you this. So you did a good job defining what that process looks like, and I think that's very valuable. But let's say there may be a perception out there on the seller side or on the seller's agent side that different loans should be weighted differently, right? So obviously you got a cash offer, that's one thing, right? You got a conventional loan, there seems to be some more comfort in that, right? Yep. if you're dealing with an FHA loan or if you're dealing with the VA loan, how do you help position, and you've done it for us, but if you share about that, how do you position those financing options in a way that gives us a competitive advantage?
Great question. And another battle that I fight every day when I'm doing these push calls with the listing agents. Because why are you doing FHA? Or why are you doing conventional? Or well, I mean,
it's almost like you look down on, and it's not true, but it seems to be like the
yeah. Well, there's a lot of just inaccurate information about FHA first and foremost, right? FHA, well, they use bad appraisers. No, it's the same appraiser that does the conventional loan. He's just licensed to do FHA. It's an additional certification. So the appraiser itself is the same appraiser, right? When coming up with value for conventional versus VA, they're going to use the comparables in the market. For the most part, those adjustments between FHA and conventional are almost identical, right? Age adjustments, one FHA goes a little farther back on sales. So if anything, you can kind of get more comps on an FHA than you can on a conventional loan. In this market, we don't need to go too far back. The houses are selling all the time. So yeah. But side by side, if I ordered 5 FHA appraisals and 5 conventional on the same houses, in the same 5 separate houses, they're going to come back at the same value if it's from the same appraiser. There's no gross adjustments from one to the other. So FHA versus conventional from an appraisal standpoint is almost identical. FHA is a little bit more strict on one item, which we don't really have down here, which is chip paint. For some reason, they'll rip apart a house if it's got any chip paint on the outside. We don't really have that problem down here, as our homes we're not wood painted, wood frames are painted very often down here. One of the only differences I see with them. Now, VA appraiser is a little bit more strict. They're protecting the veteran. So you can't really have anything broken on your home with a VA appraisal. So I will give it a little bit there. If a seller is looking or a listing agent is looking at multiple offers and the property has some condition issues, the VA would probably be the most risky of all 3. Appraisals aside, let's talk about process. I can close
before you do, I want to jump in. So let's talk about that VA process, and they're a little bit more strict in terms of condition. We've experienced that before, right? And we've also then offered a solution in order to ensure that that doesn't happen and it's not going to be a red flag. So we work in partnership of, okay, hey, this thing needs to be fixed. You do those things up front. So you just apply common sense.
100%. Yeah, you're not going to let a $100 light fixture that needs to be replaced derail the guy from his $500,000 purchase on his VA loan. I'll get it. Well, I can't pull it up on Facebook now, but I painted a house. I had 2 realtors bickering after the appraisal, going, "Well, my buyer's not going to paint that house," and the seller's going, "I'm not going to paint that house," and they're going back and forth. And I said, "Ladies, I'm going to go to the house. I'm going to match the paint. I'm going to go to Home Depot, and I'm going to bring my son there, and we're going to go paint that house for that veteran." And we did. We went there. We had to paint the whole side of a house that had chip paint, severe sun damage, and it had started to eat through the paint. Those 2 realtors to this day still send me business because you go the extra yard. And I know you would do the same thing. If you're not going to let something so petty get in the way. And that's the reality of it. For the most part, the VA appraiser is going to be more petty. But the word petty in itself describes what the real issue is. It's not a big deal. Because if it's a roof issue, I don't care if it's conventional, FHA, or VA, there's going to be an issue, right? But if it's like a broken doorknob and going into a shed, it's petty. Let's handle it. So
the topic that we're talking about today is giving your buyer a competitive advantage in this market, and how to do that with financing. But just one of the things that is a force multiplier is you're going to have to anticipate what the need is and solve that problem in real time. So we both do that. We're both in the customer experience business, right? So if we see something like that, or if you're watching this and you anticipate that there's going to be an issue conditionally, fix it. Fix it before that appraisal happens, because if not, you're not doing your job the right way. So
it also shows a lot, Chris, when you're putting the offer in and you're offering to do those things, you're giving the seller a little bit of a tell here that you're a team player. You already foresee what could be the issue and you're ready to address it, versus waiting the 7 to 10 day inspection period. So when you could say you're going to address those little things in the offer, buyer willing to do this, it shows their willingness, how much they really want the home, versus just laying it all back down on the inspection. So I think it shows a little bit of ambition on the buyer's part to be proactive on fixing any of those problems that might come about.
Yeah. So, let's also get creative in terms of, we know right now cash is king. A cash offer is always going to be the most, the seller is going to be most excited about that. So are there ways to position your buyer who's using financing with a cash offer?
Yeah. Now, some agents that are listening to this might not like this. Some may go, wow, I need to start doing this more often. So I'm going to use myself as an example. I bought a home in New York as I'm opening an office up there. So I'll be in my New York presence shortly, and multiple offer situation. And I was not going to lose. It was a house that I grew up on in Williamsville, New York, or a house I grew up on the street. So I went in, and only way I was going to win was go in with a cash offer. But I didn't want to use cash. I'm in the business of doing mortgages. I know the value of what I can do with leverage and that. So I went in with an all cash offer. A week later, the appraiser called the listing agent to go and do the appraisal. And the listing agent calls me up and says, why is there an appraisal being done? I said, oh, because I'm getting a mortgage. She said, you can't get a mortgage. You did an all cash offer. I said, no, I made an all cash offer. She goes, yeah, you can't do a mortgage. I said, no, it just says in the contract, it's a cash offer. She goes, but you didn't say you were going to get a mortgage. I said, but it's an all cash offer. If I don't close, you get to keep my cash. That's the whole, an all cash offer just says you get to keep the deposit. It doesn't mean you can't go get a loan. How about if you made an all cash offer and you went to your dad and your dad wrote you a note for $300,000 and you went to the table and bought the house? Aren't you technically borrowing the money? There's no difference in that. How about if you were borrowing it against your 401k? Is that considered an all cash offer, or is that borrowed funds too? So it's a real slippery slope. Now, I know this because I've tested it with the attorneys, that you can make an all cash offer and come in with financing. There's nothing that says that you can't. Just like you can say, hey, I'm going to put 30% down on the contract, right? You put 30% down and you can show up at the closing table with 97% financing. So the same rule applies. So here's what I suggest, Chris, is I think this is what the agents want. You guys want leverage in the market? If your buyer is in a position to pay for the property in cash, you put an all cash offer in, and then we do the financing. But obviously we're trying to protect the buyer. They don't want to do cash. I get that. That's why we underwrite the customer up front. We get the appraisal done, and we eliminate all concerns prior to the inspection period ending. So let's say, for example, you did a 10-day inspection period. We did an all-cash offer. They really want 80% financing. So now you go under contract on day one. I order the appraisal on a rush on day one. I underwrite the file with the contract immediately. Within 48 hours, I have an underwritten loan approval, if not in 24. Within 5 to 7 days, I have the appraisal back. At that point, how else could this deal go sour? Bad title? Well, good, because the contract automatically protects the buyer anyway if there's, in fact, any type of title defect or any type of lien. So they're protected the entire time. Now, fast forward, let's say it was a 21-day close. We show up at the closing table with a loan. Do you think anyone even is, the agent's not paying attention to that? They're just looking most of the time at the bottom and make sure their commission's on there. And the seller doesn't care about all the intricacies on the closing disclosure. They're just looking on the bottom to make sure that they're netting what the listing agent told them they were going to net.
Right.
No harm, no foul. And that's really what it is. It's no harm, no foul. So if you can get it done if you know you're working with a strong lender that can get everything done within the inspection period, make it an all cash offer. Now, if you don't have the cash to buy the property, all of the cash, be careful with making an all cash offer when on a 500, I keep using 500, on a $500,000 house, you make an all cash offer, but you only have proof of funds of 150. So if you make an all cash offer, a lot of times the listing agents will say, show me proof of funds. And now you're like, oh shit, I don't have proof of funds. I was going to use this as a strategy and I was really going to get financing. I have seen people get caught up with that. I was able to overcome that by using, I said, well, send me all of your 401ks and IRAs. But for the most part, sellers got to realize, and listing agents realize as well, just because they're putting an all cash offer in doesn't mean that they're not borrowing some money from family members. So sometimes we're like, well, it's an all cash offer, but they're getting a $300,000 from their father. And that kind of overcomes it too. But I'm a big fan, Chris. I'm a big fan of all cash offers in this market because I know what I can do on my side. I know I can get it done. So, and it's hard for a customer because they don't understand. They don't have the same level of confidence that I have because they're not closing 100 loans a month, But here, I know what can be done in my four walls. As we talked earlier, I said I can close a loan in 7 days only because of law. I could technically close it in 7 hours if I had my ducks in a row. But on a 21-day close, let's say you do a 21-day contract cash, there's not a chance I'm not missing that I'm going to miss that close date.
And you've guaranteed it, right?
Oh, I'll put a guarantee. Well, see, so that's funny you say that because it's hard to do a close guarantee on an all cash offer from the lender.
Yeah, there you go.
Yeah.
So going back to now, yesterday I talked about some of the best practices to give yourself a competitive advantage, and I went through the contract. So when I was going through that process, if you watched this yesterday, and if you haven't, then go check it out. I talked about knowing because we're not attorneys, we're not writing contracts, we're filling in blanks. So there are variables, there are blanks that are default timelines that are built into that contract. So what Ryan was just talking about in terms of make sure the inspection period covers the time needed to get the appraisal back and all those things, you need to be mindful of all that. You also need to be mindful of what your customer's financial position is. So if there is a miss on the appraisal on the cash offer, they're going to be on the hook for whatever that difference is. So you got to be very mindful of what their financial conditions are, what their resources are, what the timelines are. You got to be aware of all those things in order to do this. But more important, assuming all those things are in place, you also have to be working with the lender who can absolutely execute on everything that they say they're going to do. And that's what Ryan does on a regular basis. All right, well, let me ask you this now, because this is something that we've encountered and you've been helpful with. It's not uncommon for us to connect with buyers who found us on YouTube and they're under contract or they've just sold their house. They're under contract and have passed through all the contingencies of their home sale up in New York, and they want to start shopping or they want to start submitting offers down here. They don't necessarily want to disclose in an addendum that there's a home sale contingency. So is there a way to be creative, still disclose that information, and get the contract accepted?
Well, if they don't ask, you obviously don't disclose it, right? If you could just submit the offer and if the listing agent doesn't say, hey, is there a sales contingency on this? Then you could submit it without it. But if you want to protect, obviously we got to make sure we protect the buyer. Trying to get, ensuring that the sale of their home in New York is prior to the expiration of those other contingencies would be ideal too. But let's pretend that can't happen, right? Let's get to the point where it's like they're selling their house in New York on July 31st, and they want to buy their house in Florida on the same day or within the same couple days. It's quite risky. But one of the challenges that we see is in New York, there's not a real contract date. It's on or about. It says literally on the contract, it will close on or about. And about is like, it could be 7, 10, 15 days later. So down here where the sellers, they're not used to that, right? You've got a close date of July 31st. You don't close on that date, you could jeopardize your deposit. So it's a real slippery slope. What I like to do on those, Chris, is I like to figure out a way to qualify the buyer without selling the property. And that can come with just a couple extra layers of underwriting. So if your property in New York, and I'll just use New York as the example, is under contract due to close on July 31st. But let's say, for example, it doesn't close, and they wanted to put 20% down in the house. And I go, listen, you can't do that. You needed the funds from that. You're going to do 5% down on it now. I'm going to eliminate the payment on the property in New York. I can do that. I can eliminate the payment on the property in New York if it has passed its contingencies, right? I show the contract for the property in New York, and then I show that the appraisal contingency's been taken care of in the loan approval period. Now, if they're going to have a delay in closing in New York, we can't imagine that delay is because they don't have the appraisal back. Because remember, New York closings are 60 days, sometimes 90. So the appraisal's back, the loan approval's in. You know why they're not closing that fast in New York? Because it's an attorney state, not a title state. So you got a buyer attorney, a seller attorney, and a bank attorney. 3 attorneys in a room. How do you get anything done? You know, and that's some of the challenges that they have. So I've ran into this many times, and I call the customer and I say, look, I said, that's not going to sell in time. I'm going to close it this way. But here's what they say. Ryan, I don't want the payment with the $450,000 loan amount. I wanted to put down the $300 from the sale of my property in New York. I go, good. Post closing, you could take the $300,000, put it down on the loan, and we can do what's called a recast, where it changes the payment based off of an amortization of a new lower loan amount. So that's how we overcome it. But to answer your question, how is there anything strategic I mean, I could put the sale contingency in the DU findings, and if you submit the DU findings, it's kind of becomes like a cat and mouse game. They got to try to find it within the DU. I mean, there's ways to do it there, but if it's on I always say this, if it's not on the contract and they don't bring it up, I don't think they can use, down the road. Well, you can also just put it in the loan approval period. Right? How many times do you leave the loan approval period blank and listing agents allow you to accept an offer with a 30-day loan approval?
Right. So it's really, so again, this is about giving your buyer a competitive advantage. And again, yesterday I talked about the timelines. You got to be aware of what all of those variables are, but no, there are and Ryan just did a great job of illustrating exactly what some solutions are. There are ways for you to present the best version of your buyers without necessarily making it obvious that they have a home sale contingency. So you got to do it in this market. You are disclosing. If you include it in the DU, you're absolutely disclosing. But you've got to be creative in this market because there's just so much competition, and that whole education piece to this process, I think, is the most important thing. You got to get to know your customer very intimately, especially financially, right out of the gate. So you've got to constantly, from the minute that you start working with them, you've got to set expectations. You've got to be realistic. You've got to tell them the truth. You've got to let them know what the market really is like. And then you've got to have somebody like Ryan who does the legwork to ensure that they have the ability to do the things that are necessary to actually get the contract accepted. And as you've demonstrated, you can get very creative and give them a competitive advantage. So we've had, and you can attest to this, almost every single purchase that we've done with you has been a multiple offer situation.
Mm-hmm.
And we get them accepted because of all of the things that we just talked about. And it starts from, everything that we do on our end, which I shared previously, but then also the high-tech stuff that you do in terms of underwriting up front, but then also the low-tech stuff of you creating rapport with the listing agent, giving terms that or even breaking it down as to one of the things that I think is a force multiplier is that you're a great salesman. So you're going to go out there and advocate on our behalf and on our buyer's behalf and start selling that agent on why your buyer and you and the loan are the greatest thing since sliced cheese. All of those things are important. All of those tiny hinges swing big doors. So if this isn't what your process looks like, if you're not doing these things in the market that we're in right now, you're probably losing all the time. So Stop losing. And the way to do that, obviously, is to join us here at Simply Home South Florida and use Ryan because he is awesome. Is there anything, I see a couple comments out there. Are there any questions that anybody has that you want me to ask or that you want to ask now? Is there anything that we haven't covered that you think would be helpful in terms of giving a competitive advantage in this market? That was to you, Ryan.
Oh, Ryan, are you hiring? I'm just now catching where the questions are. I'm always hiring. I'm always looking for the great talent, and that doesn't come with the most amount of mortgage experience. That is, that's what makes my office so great, and is I have a lot of young minds and young in the business. I mean, there's some old dogs in here that are still young in the business, right? So, but so we are hiring. We're just looking for great people, and that's why the process is so superior. Because as Mike or Chris, you've engaged with Mike Telesco, you've engaged with Alex before. They're like, we all carry the same mindset, right? And that's where a mortgage company, specifically my branch, could really separate us, because I can control what happens in my four walls. When you get to these big mortgage companies, everything kind of gets lost in the shuffle because they don't have the same level of passion that we have here internally. And I work for a great company. Cross Country Mortgage is fantastic. They're amazing. But, I control everything in my four walls. I think it's so important for you guys to be able to choose a mortgage lender that controls everything in their four walls: application, processing, underwriting, closing, funding, all here. I can ring Kelsey right now. She's my closer. I can have her close a loan just like that if it comes out clear to close. I can call my underwriter. Hey, I need you to move this file and clear it right away. We need to close it tomorrow. Fine, let's do it, because everybody knows what we're doing here. We have a lot on the line. We have relationships with our real estate agents. We have a buyer's deposit. Today was where the conversation was about getting offers accepted in a multiple offer environment. Doesn't mean you forget about what's most important, that's protecting the customer, right? I can't forego that and say, well, let's just lay it all out on the line with the customer on the line. There's no room for error there. One question, Chris, I get a lot. You didn't ask this question. You said you do a close guarantee, Ryan. Well, how many times have you paid the $5,000? Zero. Never.
I don't ask the question because I already know the answer.
You know it. I want to make sure. I'm sure somebody else might have asked. Like, well, it's $5,000 close guarantee.
Well, you made a very good point, and I'm glad that you brought it up. And I have the same belief system. It's control the controllables, right? So you want to create, and from my end, I want to create the most incredible customer experience that I can possibly offer, right? And we want to control all of those variables. We want to lead the process from start to finish. So at the end of the experience, and again, we're bringing in vendors, we're bringing in somebody like Ryan, we're bringing in title, we're bringing in inspectors, we're bringing in whoever we bring in. Everyone needs to be drinking the Kool-Aid. They all have to have a servant mindset, and they've got to go out there and advocate on our behalf and do an amazing job. Otherwise, we're never going to use them again. So at the end of the day, if you control the controllables and provide value, and I didn't bring this up. I'm glad that you did. This isn't a fast and loose operation. Like, we are dealing with somebody's probably one of the biggest things they're ever going to deal with financially. So we take that very seriously. We're never going to ever put anybody at risk. We're always going to know everything that there is to know, so we don't put them in a bad position. And Ryan does that too, right? So we're never let me just take a pause here for a second. We're never going to be, gunslinging, cowboying it out there with somebody's life and their financial bottom line. Never going to happen. But we will control the controllables. We will lead the process. We will ensure that everyone, every step of the way, has an amazing experience, because at the end of it, we want everyone to be a raving fan. And that's how our business grows. That's how your business grows. And that's the way to do business and really have an impact out there and impact and disrupt the market. Because there's a lot of There's a lot of bad there's a lot of bad realtors out there. There's a lot of bad lenders out there. Our job is to be that difference and really add value, which I think you do at a very high level, and I know we do too.
Thanks, Chris. Yeah, no, it's I've been doing it for 18 years, and in the beginning I thought it was about marketing and advertising, and I was these catchy slogans, or where I was doing an ad in here or ad in there, and in 2013 I kind of had an awakening, and I was like, this isn't about capturing the interest and attention of strangers. That's what advertising is designed to do. They're technically strangers until you meet them, right? This is about really working within your community and providing value to your community and being service driven and relationship driven, not transactional. Like a lot of these customers, they're my friends. I've known them for years now. My realtors become my friends, and it's about creating a community. But you have to operate from the right place and the right mindset if you want that to be successful. And I'm really glad I'm out of that marketing world and more into this relationship driven world. And it's so much more rewarding when somebody calls you and says, hey, my friend referred me to you, versus I saw an ad online. And I've really it's been an amazing ride. And 18 years later, I still don't think I got it perfect, but I know every single day that I can get in there and do the right thing for people. And that's why I take my reviews so serious. I'm like fanatic on getting like reviews all the time, and because I want people to know that we really do. We operate from the heart. We're trying to help people out. If you focus on helping more people, you won't ever have to worry about helping yourself. It'll just come naturally. So it's great business.
Yeah. Put people first, and everything else falls into line.
That's right. Yeah. Including the employees. We don't yell at each other. No one's allowed to raise their voice in my office ever. I don't raise my voice. And some people say, how do I know if I'm in trouble? I said, you'll usually just get fired. But it's, we don't, our work environment is really a pleasant place to be in. And then that helps with the customers too. And the realtors really appreciate that. I mean, we have our moments where we go at it, in frustration, but at the most of the time, it's it's a pretty calm environment, especially for an office. We got 200 and some loans and closing 100 loans a month, 120, 30 loans a month sometimes. We keep it all cool. People think I'm crazy, I guess, but I guess I've gone through it enough for all these years that after a while it kind of comes it comes more natural,
Yeah, for sure. So I've included your link in the content. So if anybody out there is looking to connect with Ryan, then click that link. It'll take you directly to his page. His contact information is there. Is there any other place that they can reach out to you, or you want to give your number or whatever that looks like?
So the person has inquired on whether I was hiring or not. You can shoot me an email. I'm going to give you the short version of my email, as my last name is Brandenburger. So if you go to the website, it's going to be ryan.brandenburger. I'm going to give you guys a shortcut. It's going to be rb@myccmortgage.com. That's R as in Ryan, B as in Brandenburger, at myccmortgage.com. And you can take my cell phone number. I'm 20. You know how I am, because I'm 24/7. So 954-394-9005. Shoot me a call or a text. And even if you're a realtor and you just want to just talk about what you're doing in your business, I'm going to be honest, I focus more on real estate content than I do on mortgage these days. Give me an example. I have this is not an advertisement for Keller Williams, but I love to buy books and give them to my agents, for the millionaire real estate agent. But if you're an agent and you just want to just talk about some of the stuff, the issues that you're having with your existing lender, or on some ways that you can really leverage a relationship with a lender, let me know. Because our value proposition is not paying for half of your Zillow spend, or, it's really becoming a business partner with you and helping you achieve, your real estate dreams by helping your customers be the best possible buyers in this crazy market. Or and there's so many things that we do for our realtors that go above and beyond, and that's the relationship I think every realtor needs, is a great lender. I've been so blessed to have these realtors with me, for some of them for over 15 years that we've been working together, and we've formulated a business. It's a real partnership. You got to work hand in hand. Like when Beth is over the weekend, she needs something, right? We're there for her, right? We're there for her, and we're there for us, but sometimes they just need us. Like, hey, Ryan, we got multiple offers. Can you review this desktop underwriter for me? Or what do you think about this? Or what do you think about that? It's more than just products and programs and pricing.
Yeah, and it's funny you mentioned that you pick up the phone. Anybody watching, the easiest thing that you can do to differentiate yourself from most of the competition out there is answer your phone when it rings. You'd be shocked how many people don't. And it's those tiny little hinges that swing the big doors. Answer your phone. It's not hard.
Get the spam.
Yeah.
I got a spam detector to help me.
Yeah, me too.
Answer a phone call anymore. Yeah, finally I figured, but now I know if it's not going through that spam detector, it's an opportunity. I'm picking it up.
Absolutely. Well, listen, I very much appreciate your time. I know you're busy. I think we put a lot of really good content out there that I think people will find valuable. If you need help with anything, obviously reach out to me. Obviously, my links and phone number are out there, 561-516-2442. You can reach out to Ryan. His links will be in this post too, and he gave you his cell. Is there anything that we didn't cover that you'd like to?
No, I think, it's needling in on today's topic, which is how do you help your buyers win in multiple offer situation. I think we covered it pretty well. We have to be aggressive. You got to be aggressive in this market. You got to find somebody that's willing to get out there and fight for your buyer. Your buyers will recognize it more than anyone. And that's how we generate referrals, right? You got to give them that wow experience. And when you help somebody overcome 10, 12 offers to get their offer accepted, you've just moved to the front of the line when it comes to real estate in their mind, because you're like, man, that guy put together this dream team, right? And that's what it's about. So we gotta fight, in the business. Find like-minded people that want to fight with you, and your business will definitely grow with it.
Absolutely. All right. Well, thank you so much for your time. I appreciate it. And I hope you guys found that valuable. I will be out there later tonight and setting some appointments using Zillow's data for free. So I'll showcase what that looks like. But thank you again, Ryan. And I'll talk to you guys soon.
Appreciate it.
All right.
Thank you guys. Bye.